Hello everyone. Now I'll be telling you about the adjustment in final account. First of all, let me tell you what an adjustment is. The transactions occurring after preparing a trial balance that must be considered while preparing a final account is known as an adjustment. Okay. The items that appear in the trial balance have a single effect in the final accounts, but the transactions which appear outside the trial balance, those have a dual effect. The transactions which do not appear in the trial balance, those are known as adjustments. The adjustment transactions represent such items of incomes and expenditures which relate to the current year and have not yet been brought into the books of accounts. Such financial transactions are adjusted after the preparation of trial balance. The adjustment helps to determine the actual net profit and financial position of the business. So every adjustment, like I said, has a dual effect. So these are the possible effects of possible dual effects. The effects can be on the trading account and the balance sheet, or the profit and loss account and the balance sheet, or the trading account and the profit and loss account. So there are some significant adjustment in transactions and their effects on the final account. So I'll show you through this. Okay. So as you can see over here, there are 4 columns, wherein the first one is the serial number, the next one is transaction, the third one is effect on the final account, and the treatment in final account. Let me tell you first about the closing stock. The unsold items of goods remained in the store at the end of accounting year is called as closing stock. It is an asset of the business. So it is shown on the asset side of the balance sheet and credit side of the trading account. Now the second one is the outstanding expenses. Outstanding expenses are those expenses incurred but not yet paid. So they are the liabilities of the business. These are shown on the liability side of the balance sheet and added to the concerned item on the debit side of the trading or profit or loss account. So the third one here is the accrued incomes. So accrued incomes are those incomes that are earned but not yet received. They are the assets of the business. These are shown on the asset side of the balance sheet and added to the concerned item on the credit side of the profit and loss account. The next one is prepaid expenses. Prepaid expenses are those expenses that are paid in advance. They are assets of the business. They are shown on the asset side of the balance sheet and deducted from the concerned item on the debit side of the trading or profit and loss account. The next one is the advance income. Advanced incomes are those incomes which are not earned but received in advance. They are the liabilities of the business. So these are shown on the liability side of the balance sheet and deducted from the concerned item on the credit side of the profit or loss account. The next one is depreciation or amortization. The permanent decrease in the value of fixed asset due to continuous use is called depreciation. It is the loss of the business. So it is deducted from the concerned asset on the asset side and shown on the debit side of the profit or loss account. The next one is bad debts and provision for bad debts. So the uncollectible or irrecoverable amount of debtors is known as bad debts. The amount of provision which is created for uncollectible debtors is called provision for bad and doubtful debts. These are losses of the business, so they are deducted from the debtors on the asset side of the balance sheet and shown on the debit side of the profit or loss account. The next one is interest on capital. The amount of interest which is allowed on capital is known as the interest on capital. It is an expense, so it is added to the amount of capital in the balance sheet and shown on the debit side of the profit or loss account. The last one is interest on loans. So it is the amount of interest which is allowed on the loans. So it is an expense and hence it is shown on the liability side of the balance sheet and debited to the profit and loss account. So as you can see, for all these transactions, they have an effect on the final accounts, and the adjustment to be made is different from what is there in the final account. So these are some of the adjustments that needs to be done in the final account.